let's get into this crypto winter. It's been now, when did it peak? December?
I have no sense of the timeline on it.
It's 2019. It peaked in 2017 in the Christmas, or was it? Yeah. So now we're over a year since the
I guess
bubble
it's been about
burst.
a year, right? Since
Yeah, it peaked in December, 2 Decembers ago. So
Mhm.
we're now 18 months after this. Is there anything that's going to come out of this? And how will we look back at this?
I mean, I think there are people still working hard on this, right? On various aspects of this. I have exactly one crypto investment in a stablecoin company. I think there's a real problem they can solve there.
Yeah.
But, I've sort of said, you're going to solve interesting problems by slaughtering some of these sacred cows in the religion of crypto.
Right.
And so that one, it's like, look, you're going to take a bunch of dollars and put them in the bank, and crypto people lose their mind when you start talking about that. But actually, it turns out there are a set of real problems you can solve for real people that way. I see, as I talk to crypto founders, like they're out there still building, because you forget they raised hundreds of millions of dollars.
EOS raised billions.
Tezos, I think you've talked to the Tezos
I had them on the podcast. Yeah. They raised 100 or 200 million.
I mean, they've got a team sitting in France just building software. So I like that I've always felt like the market cap thing was a bug, right? We all lost our minds on this pyramid scheme. And what was interesting was the underlying technology. So I think actually the bear market accelerates the technology, because it gets rid of all of this noise, distraction noise. So we'll see. We'll see what happens.
And the SEC has come down on a couple of these as well and made them reverse it,
which is great. I mean, they should put all those people in jail.
Yeah. I mean, it's just crazy.
I want to speak counter to that, though. I mean, if you have $100 million in the bank, and really like nobody's paying attention, what are you building and why and for
totally
whom?
Fair.
Right?
Totally fair.
I mean, like that is for me as like a serial entrepreneur, like that is the worst case scenario.
Yeah.
Like not just overfunding what you're doing, but so massively overfunding what you're doing that like literally no one ever even has to work again. So what are we even doing with our time?
I mean, I think that's totally fair. I mean, my critique of this funding model was that we've gone back to waterfall development, right? So for folks, who have sort of not gone through the software development lifecycle, in the olden days of yore, we would write the spec and then we'd build for 5 years and then we'd ship something and know if anybody wanted it. Waterfall. We decided that was a bad idea, right? So startups move towards this rapid iteration, shipping code all the time, learning all the time. In crypto, especially with the the big fundraise up front, is this, let's just build for 5 years, off here, build protocol, and
what could go wrong?
Wants it. So I think that's totally fair. But at the same time, there's people sitting in a dark room somewhere building things, and maybe something will come of it. At least they're not being distracted by, like, there was a period where everybody was quitting their jobs because they just had a bunch of Ethereum, and they're like, I guess I'm calling in rich now. That's gone away, which is positive.
Yeah. It was very troubling for me, having worked with AngelList and doing angel investing, having my own funds, to watch people do securities offerings without any consideration. Like in the early days of AngelList, and we were doing the syndicates, we were sitting there thinking about every aspect of how to do this right, and do right by the founder and do right by the LPs and the syndicate members. And I just remember these early days of Navala and I talking like, should we do a company that's pre-product market fit? Should we do a bridge? Okay, how many months would this bridge last? Okay, let's set the bridge, if they're going to do it at 12 months, let's make sure we put that into the document so that people who are, and we really were thinking beyond whatever the SEC said. We were just thinking, what would make the investor on the other side feel better? Like, so.
Yeah, I mean,
these guys were doing 2-for-1 sales and
Well, I think the biggest
advertisements
problem that I had with it was that there was this lie that was like, this is the democratization of this stuff. And when in fact what you saw was all the traditional investors front running these things, getting in at low prices, and then we'd go out to the public with these things and pretend that they were getting a great deal on them. I think what you're going to see in the next wave, if there's a next wave, is these things are going to look much more like traditional venture rounds. And that's going to be better for the companies. That's going to be better for the teams. And people who are angsty about, accreditation rules are just going to have to kind of deal with that.